I look forward to doing this again.
Thank you very much. If we're lucky in a year's time, we will still only have modest inflation. It will have ticked up, it's already now ticking up, you know. So it will still be modest, and we then can discuss comparisons with 100 years ago in Germany, Weimar Germany, because, you know, we have some time, hopefully, if we're lucky, in this run up to inflation. But I think there is, particularly if you put the political scenario together with this and the central bank digital currency and the goal to reduce the number of banks, and of course central bank digital currency is supposed to be linked to some kind of global new monetary architecture, financial architecture. Therefore, you know, it's possible that Weimar style high inflation, even hyperinflation, could be a scenario that could be encouraged by some. And so, yeah, we probably will still be talking about inflation, I think, but let's see.
That's one thing going on. If that's not big enough, within that is embedded decentralized finance, where algorithms provide yields. There's lending, transmission, remittances, payments, custody, settlement. I mean, this is a multi-quadrillion-dollar world that's being developed. You know, in terms of flow, in terms of stock, the bond market, the equity markets, all of these things are $200, $300, $400 trillion markets each. And a lot of this is going on to this. So this is the magnitude. And currently, the digital asset market is 1.7 trillion. So what is it going to be worth? At least 100x from here still, probably 200x, maybe even 500x. So that's the magnitude of the opportunity we all have in front of us. And this is the biggest thing we've ever been given in anything. Because the internet was basically the exchange of information digitally. What is being built in the digital asset space is the exchange of value, which is the top tier of the internet that it didn't have. The digital exchange of value. That's changing everything, because it's not just payment systems and an integration, but it'll change everything, because people could watch this video and have streaming payments. So you only watch for the milliseconds that you watch. We talked about Brave browser and the other mechanism by which we might get paid for the attention economy. We might have our identity on the blockchain, so therefore I can get paid for my use of my identity. I have time to make a bet. If you believe that the system is broken, take that. Well, then this has a very good chance of working. If you believe that the equality gap needs to change, this has a good reason to work. If you believe that the third world needs to be banked and that remittances need to be cheaper and that there's a digital revolution happening in countries like India, Kenya, Nigeria, then you need to get involved. So I don't see a world where this is not going to pay off over time. And the younger you are, the bigger the bet you should have. Or the closer you are to the space. So, you know, I had small bets and now I just think its returns is eating everything else. That will not go on ad infinitum. We will have down cycles and I will try and time that. But my guess is once I get out, I'll probably try and do VC investments or token investments from somebody who knows what they're doing. Maybe give it to somebody else to allocate because the easier part of the cycle is done. I don't really care. All I know is there's this massive digital playing field that's been built for us to all completely immerse ourselves in, make money from, enjoy. Our business models will change, everything will change. It's fantastic.
On that last point, what do you think of Bitcoin? Is it good or is it bad in helping?
It is a way for people to invest with some element of trust in that asset. When we look at Bitcoins, we don't see it as a huge part or even big part of how the monetary system operates. And at the fund, we are not shall I say, invested in Bitcoins.
All right, I think we have time for one.
Flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
As my colleague Irvin just explained, food price inflation can increase food insecurity. Now, you may have noticed that lately your groceries at the local supermarket have become more expensive. You're not the only one. Our data analysis shows that food inflation has recently increased in many countries around the world.
Now, add to this uncertainty over financial conditions. Accelerated recovery brings good news overall, but it may also create some less desired outcomes. For example, strong growth in the US can benefit many countries through increased trade. We expect inflation to remain contained, but faster US recovery could cause a rapid rise in interest rates, which could lead to a sharper tightening of financial conditions and significant capital outflows from emerging and developing economies. This would pose major challenges, especially to middle-income countries with large external financing needs and elevated debt levels. Many of these countries will need more support. Return to growth would also mean policy transition and the need to deal with the long-term scars of this crisis. Among them is the impact on human capital, especially on the young, the low-skilled, women, and informal workers. Allowing those scars to persist will result in lower growth potential, making it even more difficult to increase employment and reduce inequality. It is very clear there will be no sustainable recovery without giving people a fair shot. There is also the potential of digitalization. In a recent survey, almost 50% of shoppers said they were using digital payments more than before the pandemic. I'm one of them. A growing number of central banks are considering digital currencies, which could transform the international monetary system. And digital infrastructure investment could help transform our economic system, boosting productivity and living standards. Now, to unlock this potential, we need to combine better infrastructure and greater access to the internet with more investment in people's education and health. This requires sufficient public revenues and national tax systems retooled for the 21st century. In many cases, this will mean making them more progressive and fairer. And that has to be coupled with modernizing international corporate taxation through multilateral efforts to ensure that highly profitable firms pay their fair share where they do business. All this is essential.
Is the fiscal stimulus that the Biden administration has requested and has now been passed in Congress too big? As you know, there is a heated debate about this. There are people, very distinguished economists like Larry Summers, who argue that the amount of money proposed to be spent is 4 times larger than the so-called output gap. That is, the gap between where the economy would have been without the pandemic and where it is today. That the danger here is that you overheat the economy and you end up with inflation. Inflation is something the IMF is particularly focused on and sensitive to. There are others who say, no, this is about right and it will not trigger inflation, largely because it's a one-time measure. How do you think about it?
First, great to be with you, Farid, and of course to be in this conversation hosted by the Center for Council on Foreign Relations. I feel that we are indeed in a very important time in history, and we do need to talk about these big decisions that are being made. What we see from the IMF is the criticality of moving the world economy on sound footing. And the decision the US has taken to provide further stimulus, in our view, is going to contribute some 5 to 6% of growth in the US over the next 3 years. In other words, it is helping in lifting up the US economy, and it has positive spillover effects for the rest of the world. One of the reasons we are going to upgrade our projections for 21 is because of these extraordinary measures taken and the most recent stimulus in the US. We did look into the question of inflation. Our conclusion is that 2022 inflation in the United States post-stimulus would be 2.25%. In other words, not something to be scared of. And we recognize that even if there is a small spark in prices because pent-up demand leads to people coming with their capacity to buy goods and services, this would be short-lived. So we are not in the school of those who worry about inflation.
Oh, I was going to go to exactly that question. If the 1.9 trillion doesn't make you nervous, how about if I add 3 trillion of infrastructure spending to that? Does that really not alter your calculus in terms of inflation?
We have to see what is the composition of the next proposed package and how it is going to be implemented over time. Because for infrastructure investments, we take a much longer period of time for the money to actually reach out those for whom they are intended. But let me make a broader point, and it is twofold. One, we very strongly believe that now is the time to move in green investments, especially green infrastructure investments, and investments in human capital.